I didn't plan to record this revision part but just because of people that didn't get it. So all right, so what was I talking about again? Okay, continuation setup, all right? So let's see. I'm looking for a very good example. Sorry, guys. Trying to see the one for sales. All right, I found one, but not the best example, actually. So we have this level over here, right? This whole level, right? This, and then prices went all the way to that side. Oh, shit. Prices went all the way to the upside. And then, as you can see, we have price giving that little nudge over here at this point. So immediately this, imagine someone was in this entry, see, sniper entry, right, for buys, and probably he didn't take profit early. What happens? Drops down. So we are seeing that more often than not, price is going to use this level to continue price to the downside. And that was what happened there. See, just a gentle touch and then it starts to drop. Imagine just having to pick this, just this single phrase in a day. Your first target should obviously be this low. Yeah, good. You don't have to worry about any other thing. Okay. So obviously, just this is not a reason to pick this trade. You have to also consider all the time frames. So I just want to say that again. So this is one example. I think this is a very, very good example. So let me pick another example. Let's say buy scenario now. So remember again, continuation, as you can see, continuation setup. Okay. The first type is continuation. What's breakout structure type? It's continuation. Okay, so let's look for buy continuation. So let's see where do we have buys? Okay, so now see this level. Now permits me to use H1 for this. Yeah, H1 is much more clear. I don't know which one is clear. I can see it. Sorry. So I can see. Oh, here's the one. Now the price action. It's very, very familiar. It looked very familiar. Oddly familiar. See there? Okay, let's use this one. This is also a very good one. This one. Oh, good. Sorry. So let's look for our old friend. It is taking time, guys. Normally, I should have made a screenshot of this. This, oh, this is also a very good example, by the way. All right, so what do we have here? We have price. This is the level, right? So you have first breakout here. You see that? You have a breakout here. You have a breakout here. So if price is coming back to this level, a lot of people want to sell. In fact, you can be in a sell here yourself. Price is dropping. You're happy. Sniper entry, right? But immediately what happened? Price came, took out this guy completely. And tell me where price would use to continue to the upside, this level. The price came, reached the low, and then start to go up. So that's type 1. All right, so if you have any question on type 1, breakout structure type 1, please let me know. Okay. So we have two very good examples. This one, and where's the other one? The other one is somewhere here. This one. Okay, very good. Two very good examples. Maybe very, very good examples. So if you have any question on type 1, please let me know. You can either signify by on the chat box or just raise your hand. I will unmute you. One, I'm counting to five, so you can be first. 1, 2, 3, 4, 5. Okay, very good. What you understand? If you understand breakout structure one, can you type yes on chat box? If you understand breakout structure one, this one I just explained, can you please type yes on the chat box? Okay, yes. Okay. Well, just one person. Okay, two people. Okay, four people. Just four people. Five, six, seven. You guys, thank you. All right, so let's see breakout structure type 2. So we said there are two types. This is the continuation. So let's see the reversal type. All right. So now the reversal type can come in different form. Okay, somebody stop manage. Okay. So the reversal type of the reversal type. Now the reversal type can come in many forms. But the idea is that there is usually a shift in market structure. So you have something like this. So I'm going to do both bullish and bearish example. So for bullish example, you probably have something like this. So it's a reversal. So that means, well, there's a sell trend going on. Okay. Right. So price comes to this level, comes to this area, rather than buying at first, rather than buying at first, right? Just like if breakout type one, it fails, okay? And because it has failed, we have a lot of questions. We are expecting that price would come here, right? And continue to the downside. This is type one. But in type two, when price comes back here, price breaks this again. Rather than price reacting to the downside to continue the bearish trend, right? Price will break this again. Okay. So let me show you what I mean. So price is going to give a small notch over there. Adjust this to this level. Okay. Price is going to give a small notch here, right? Break it. So what I now say is that there's a chance, high chance that price is going to use this level to continue to the upside. Again, what does this remind you of? It is still the same EFG setup. At this area is where you have your engulfing sell, right? At this point, your engulfing sell has failed. At this point, you have an engulfing. The price is coming to react to the upside. So why is it called a market structure shift? Why? Because we were selling before, now we want to start buying. Okay, and this is a shift in structure. All right. And as you've seen in many examples, price can decide to induce the low before going higher. So we'll look at that very shortly. Okay. So that's type two. Let me see for the other example. So you have something like this. Let's say we're buying for then small notch, right? We break, we come back instead of going all the way up. That does not happen. Again, small notch, and then we drop. The price will return and continue to the downside. Okay. So you can take a screenshot of this if you want to follow them. So this is the first one where you were expecting price to go up, but that did not happen. Rather, this is what happened, the downside. Okay. Or let me take a screenshot and send to the page right now. So copy. So that's fine. So if you have any question on this, please let me know. Please. If you have any question, you can either type in the box or signify by raising it. If somebody has a question, screenshots the continuation to please. Oh, okay. Okay. Continuation. Down. Right. Down. So six, right. So I think everybody can join now. Now I see plenty of people and I'll be able to join for the time today. Wow. Well, that is what it is. We have to do what we have to do. Okay. This is a complex one. It takes all the bias as our time. How to identify what's going how to identify what's going to happen. You can understand the question. Okay. I'm not sure I understand your question about lack. I'm not sure I pronounced that well. Which is complex. Okay. The thing is, let me give you guys a hint, right? When I come to the market as a trader, I come with an open mind. I don't come with preconceived notions. So if I don't see something, I don't see it. I don't know if that makes sense. If Jerry, it's not as though you'll be looking for, oh, where's the breakout structure? The moment you can practice, and be able to identify it on the chart, when you see it, you can never miss it. You can never miss it. Okay. When you see it, you can, in fact, you'll be so happy that, oh gosh, it was a little baby. It's little damn cell hiding over here. So when you see it, you will be so happy. I promise you. So I think number one is familiarize yourself with the concept. That's why I try to explain the reason behind everything I drew and not just drawing the patterns because the patterns don't make sense. So I explain the reasons. Oh, okay, this is what happened here. The price takes the people out, then reacts, and then this happens. Okay, so the logic is what should make sense to you. If the logic makes sense, then you're good. You don't have to bother. And how you're going to know when this is going to happen is sometimes you would not fall trap to all of these things if you trade with time frame concurrences. Yeah, M15, H1, and H4, there's a conference. You have a better chance at getting good trades that way. And like I mentioned, when M15 is doing something that H1 and H4 are not doing, you don't have to take a trade. You just be patient. Your trade will come to you. Okay, your trade will come to you. The idea of this bootcamp is not to make traders that would stay on the chart all the time, and then get frustrated, lose their account. There's no discipline, there's fear, there's FOMO. They keep saying, oh, I'm confused, I don't know what to do. No, the idea is to make all these things easy, right? And that's what I'm trying to. That's why I keep trying to explain over and over and over again. Okay? So the first thing you want to do is understand the logic. This is what is happening here. And even if you don't even practice it apart from today, but because you've done the task, when you see it on the chart, you might just open gold. I mean, might not see it tomorrow, might not see, but the day you see it, and you're, oh, this is damn self, this book of art doing over here. And then you're able to pick it just like that. And the reason why it is much more interesting is because with all this idea, your trend lines now make a lot of sense. So for example, if I'm going to pick this trade, there's a chance that I have a trend line here. First touch, second touch, RRS, and then this will be my entry. Your trend line will now make so much sense. There's also a chance that this happens. Okay? First touch, second touch, this will be the entry. So all of these structures and EFG, they form a good foundation, a good background for you to be able to play around with trend line. The same thing here. See, in this scenario, this can be, oh, sorry. If you, this, I'm not saying always, so I'm just giving you an instance. Oh, this man, let me add it to me. Okay. This can be a good chance. So your first touch, second touch to be your third touch. If you can understand all of this logic, working with every other thing you know already in SNL will make a lot of sense to you. You're able to put one and two together. You're able to reason along and then add your own magic. Okay. So now let's go into what we have today. So for today, we are going to be covering the following. I want to type them out so I don't forget. WG, MTF, and equilibrium. How to mark zones and refinement for going to cover liquidity or imbalance first. Hidden edges and imbalance. 5, liquidity. Okay. I hope you guys are ready. All right. So double engulfings. So yesterday we mentioned EFG, BPE, breakout structure. So those are theory setup. So another setup is the double engulfing setup. It's very, very popular, especially on H1. And it's just very, very simple. It's after price has formed an initial engulfing somewhere, anywhere, maybe in the past or wherever, then you suddenly see that, oh, there's another engulfing that is relatively close to that same engulfing or reacting from that same engulfing. Okay? So that's the double engulfing. It's very, very simple. This is not as complex as where we're coming from. So okay, so this is a double engulfing. So you have engulfing buy here and another engulfing buy. The reverse can be the case, right? Where you have an engulfing sell. So I need to unmute somebody. I'm not happy as I don't know what I'm talking. So if you want me to unmute you, please let me. I need to unmute one person that will be responding to me. A few bots this will just talking about getting your feedback. Right, so if you want me to unmute you, can signify chat box, or if you are free, if you are where you can talk, please, no problem. You need to ask something. Just everybody knows already. Everybody's volunteering. Who is going to volunteer for us? A few bots talking alone. I need to hear someone's voice. Sorry. Anybody? Anybody? Hmm. Okay. Okay. If I unmute you, you have to unmute your mic, or else I'll remove you from the. I just need to hear someone's voice, really. Meet Malik. Malik spoke yesterday. Hi,
Hey,
Malik.
yes,
Yeah,
how are
thank you.
you?
Okay. All right, thank you. Now I feel more alive. So, first on today's list, double engulfings. Double engulfings are very, very easy, very simple. Okay? So when you see double engulfings, you see them. You can see them on any time frame, but because I'm on M15H1, you see these are the time frame that I will see it, and there's also I know there's too much background. Oh, a lot of it on H1 and on um. Oh yeah, let's go to gold. So we can look at last week price action and all that. And you really enjoyed looking at last week price action. Oh, this is Saxo. Let me change the. Okay, so for example, let me show you double engulfing. Double engulfing setup. So number one, this is a very good example. This is an engulfing here, right? This is another
Yes.
engulfing. Thank you, Malik. And the idea behind double engulfing is to be able to use trend line. Actually, see, first touch, second touch, entry. Okay. Now, the second engulfing does not necessarily have to react from the first engulfing. As you can see, this one is not reacting from it. Okay. So the idea is to, again, be able to use trend lines for it. Okay. So another example, I saw one last week or 2 weeks ago. A very, very beautiful trade. You know, kept 15. Okay. Okay, so again, this is a double engulfing setup from, I think this was even from Friday. Imagine it was from Friday. So this is an engulfing over here, and this is an engulfing. Okay. Double engulfing. Again, never forget that the idea of having double engulfing is trend line. Whenever you see it, there's almost, I can assure you that there's a trend line close by. Okay. So first touch, second touch, entry. Okay? Whenever you see double engulfing, you can be sure that there's a trend line very, very, very close by. Right. So this is another one here. This is an engulfing. And this is another one on it. Oh, this is not an engulfing. Sorry. I thought it was an engulfing. That's not an engulfing. Okay. So let's look for another example. Let's see. There was another one. Okay, this is a very good example. Oh, this is not an engulfing. Let's pick that. That's not engulfing. Okay. So again, double engulfing is also a continuation setup. Continuation setup. So let's see. Something here, but I can talk about this now. I want to talk about leading engulfing. So angel bounce. So okay, again, another double. Oh, this is the same one I drew now. It's a different one. There we go. Right, see double engulfing. The first EG has to cause a structural break. No, it doesn't have to. It does not have to. It doesn't have to. But you must remember that just because you have an engulfing reacting somewhere on a time frame does not mean you pick the trace. That's why I keep saying this. You have to have multiple reasons of what is happening on other time frame. Okay, so now number one, this is an engulfing here, and then this is another engulfing. So engulf, and then again, if you draw your trend line, you almost get the perfect entry. Almost always. Almost always. You know, going out to you. Almost always. Okay, again, another one, then engulfing, right? Always remember continuation setup, another engulfing, double engulfing. Just like I tell you, if you draw a trend line, you would almost always get the perfect entry. The first touch, second touch, and entry. Almost always. All right. And that's why for most of the time, you may not see me drawing trend lines, because the idea of engulfing itself tells me that trend lines are in the view. Okay, legend. So again, another example. See, this is an engulfing. This is another engulfing. Oh, right. Like I said, the second engulfing necessarily must not be reacting, but they just must be in close proximity. Then, like I said, almost always you get the trend line entry. First touch, second touch, the brilliant entry. Okay. So that's double engulfing. Let's move on. MTF. Ah, MTF is very, very, very beautiful. Okay. Very beautiful. And the reason is because when people ask me that why is MTF important, I tell them one thing. Okay, MTF is to help you reduce your risk. MTF, you don't always have to use MTF. Okay, MTF is to help you reduce your risk. Okay, so what is MTF? So let's assume this is a big engulfing field or engulfing cell rather. Okay, for me, MTF means that, or MTF plays on the idea that price is fractal, meaning there is nothing you see on a time frame that you cannot drop down lower for refractment for. We will use WJ when it comes to entry. Yeah, the whole idea is a setup. So it's a setup and also an entry model. But remember, when you see it, yeah, there's a logic behind it, and then other time frames also must corroborate that position that you want to take. Okay, so come back to what I was saying. A question. Okay. All right, so NTF plays on the idea that price is fractal. meaning that whatever you see, or there's a way they say it in Malaysianness now. They said in something there is something. Yeah, I think that's the word. In something there is something. That means in an engulfing, if you have this as an engulfing on the daily, if you drop to the H4 chart, you would see an engulfing, another engulfing cell inside this big engulfing cell. In something there is something. So let's say example. Let's look at it. So MTF for me, I only do one time frame MTF. Okay? I only refine by just one time frame. I don't go lower than one time frame. Right. So let's take this as an example. I don't want to go too far. Let's take this as an example. This one. Okay, this level. This is daily. All right. So H4. See H4. This is the engulfing on the H4. It means that does not mean I should delete this daily engulfing. Guys, please. That does not mean you should delete this daily engulfing. Okay. It just means that you can find a refined level here. So usually what you can do is you can make this deeper or something. You can even leave it like this, regardless of whatever happens. Okay. It's just to give you an idea of that the fact that you can actually refine an entry. You can, for me, like I said, I only use one time frame. I don't like to use less than one time frame because that can make it less effective. So let's see this one. It didn't react to it, don't bother. But in something, very something. You see this beautiful engulfing. Well, let's take this one. It's engulfing. So in this big engulfing, there is small engulfing. And this is very, very important. Whatever we see in trading or whatever we mention in trading does not mean it happens all the time. But the fact is that when it happens, you are able to take advantage of it because you have the knowledge. Okay. So when it happens, you're able to take advantage of it because you have the knowledge. So another example, let's see much more closer example. So let's see an example that price reacted to. Let's see this one. You agree with me that this is an engulfing. Again, week to week, right? These two candle one, candle two, engulfed this bearish candle. So if we decide to go to a lower time frame, that is H1, like I said, I don't like going lower than H1. If you decide to go lower, you would notice how that there are two engulfing inside of this big engulfing. This is the 8 point engulfing. Please, we're already going to zone marking because I saw it very good example. This is the big engulfing from H4. Let me show you again. The big engulfing from H4. So that week to week, please. Week to week. So from this week to this week, that's the big engulfing from H4. But when we go to H1, we can see two engulfings. This is the first engulfing number one. And this is also another engulfing number two. As an SNR trader, the engulfing I'll pay attention to is the engulfing that is fully within the biggest engulfing. This one is outside of this zone. This one, Malik, are you still there?
Yes.
Yeah, you agree with me that this engulfing is outside of this one. It formed outside of it, as you can see, so big. Again, week to week, please, week to week. However, this one is still within the big zone. Okay. So price comes, taps, and then starts to buy. All right. So again, when you're refining a level, the moment you see that something you're refining to is outside of the zone, try to ignore it. Even if you miss the trade, don't worry. The market always opens. Okay, the market is always there for us. The market does not leave. What you want to do is to focus on your own success and build it gradually. The market is always available for us. Okay, always available for us. All right, let's see another example. Let's see this example. Okay, very good. Good. Let's see this one, this area. Okay, so this is an engulfing. This one. This is the big engulfing. So now let's go to H1. So on H1 again, you can see that there are two different engulfing. This is zone marking. Zone marking. Now this is the first engulfing, right? Again, this is another engulf. So if I'm to mark this zone, you will see that this second engulfing is outside of the H4 engulfing. So my refined My MTF is this engulfing, this one. This is the one I'll pay attention to. If price comes here and buys, I'm not picking this buy here because of this engulfing. I'll be picking it because of another reason. Maybe there's something on M15 or H4 or something. Okay, I hope that makes sense. But if I'm to refine this H4 engulfing, this is what I'm going to be refining into this level. Okay, and I will not leave out this one. We'll talk about hidden engulfing very soon. All right, so let's see another example. Let's see this one. Okay. So this is H1. We are on H1 currently, guys. So I'm going to go to M15. All right. The idea of MTF again is to refine. Now, as you can see, in something there is something. Okay. So in this big H1 engulfing, you can see this M15 engulfing. The price came, tap, and then start to bounce. The same thing applies to SNL levels. It's not different. Okay. Let's see. For example, if I mark this classic SNL level over here, this is M15. I don't want to go lower, so sorry. Let me go back to H1. So if I mark this H1 classic SNL level over here, right? The engulfing, guys. Let me go to first. So we have a classic SNL level. Ooh, good tap, right? MTF means that you want to refine this level because if I enter at this point, right, my stop is here. This is 22 pips SL. Not bad. There is no, see, don't let anybody deceive you. There's no SL that is bad. As long as, depending on your trade, though, don't do 2 to 1, that your SL is now twice your TP. That's not a very good trading strategy. But ensure that your SL is within the limit of what you can accept. Now, some traders can decide to take this trade from here, put their stop below this level. For me, I'll probably put my stop below this one, right? Below this guy over here, right? But some traders can say, oh, no, I'm not going to take my entry at this point because maybe it's a limit entry. I want to wait for price to come to this area. So this trader, this first trader is risking, say, let's adjust it back. Say it's risking 22 pips, right? Then this second trader from here is risking only 16 pips, right? So if they are working with percentages, and this is the first target, this trader would make 6%. This trader would make 12%. But what I want to tell you is that did they make money, Malik? Both traders made money, right? Sorry, Malik, are you still there?
Yes.
All right. This trader and this trader, did they make money?
Yes, both of the traders made more money, but
Exactly. Both
the
traders
risk
made
reward
money.
is less.
Exactly. But it doesn't really matter. Okay. What matters is that you made money. With time, the trader that was taking this trade, with time, you will gain experience to take this trade too. But you must first start to make money. Before you start experimenting with what you don't know and uncertainties, you must first think money making is your number one priority in trading. You must make money. You must make money. If you're not making money and you've been in this trading game for a very, very long time, there's something wrong. Because no matter how terrible a strategy is, a trader must make money. Your wins must be more than your losses. If that is not happening, that means there is something about your risk that you've not understood. So you have to understand your risk. And that's why I say more often that when you enter a trade and you have to start praying that happen this, and you are sweating, you are nervous. You enter a trade, you can't leave your screen and just go and do something, maybe watch a match or play games or do any other thing. There's probably something wrong. Is it that you are risking too much than your emotion can take, or you are risking all your capital? Okay. So let your risk be within what your emotion can. Don't risk more than your emotion can handle. That's why you don't compare yourself to other traders. A trader A can be able to risk 50% of his portfolio and he won't be scared. Probably because he has a lot of money or he has trust fund baby and he's posting on his IG and he's saying, oh, I reached 2% on my profit or I reached 4% on my profit. It's an aggressive method. And you saw that and say, oh yeah, it's true. If I reach 2%, 2% of my profit, I just need I just need 4R to make 8%. And then you come to the chart and just reach 2%. And immediately you enter 2% trade. Things going to your Excel, you're praying, God, I want to do this again. This will be the last time. We don't want to do that. You want to look at your own emotion. See, look at yourself as a trader, as a person that I am. What is the risk I can cope with that will not make me run mad? What kind of risk can I take that will not make me start praying? Those are the kind of trading you want to stick to. Over time, as you make more money, you gain more confidence to reduce your risk or increase your risk rather, and increase your risk to reward. Okay, as you grow. But number one, you must make money. Money is what will keep you in this game. If you're not making money, a time will come you get frustrated really. So money is what will keep you in the game. So that's double engulfing. Double engulfing. And that's the idea of MTF. So for equilibrium, I might not get a straight example today, but equilibrium just means that on two different time frames, you have the same thing happening. For example, you can have a gap level on M15, and that same M15 level is another SNR level on H1. Okay, or it can be vice versa. So it just means that you don't need to draw an extra line to mark that support resistance level. Why? Because it is the same level on those two time frames. Okay, so let's see. Uh, this is not something that I can plan, but let's just see. I hope I get one. I hope I'm lucky enough to get one. But there's a way they look like actually. They have a fashi. Call it a fashi. Okay. Okay. So let's see if I can get an MTF. Oh, what's an MTF last week? I don't think so. So let's see. Okay, let me go to H1. So we can go from H1 or H4 down. Okay, now see this level. A singular line. See this singular line. This is a classic scenario on H4. And on the H4 also, this is a double engulfing. This is an engulfing number one. This is engulfing number two. This H4 candle opens and it's coming down to this level, right? This singular line is a classic scenario on the H4. As you can see, very good scenario. So now if I go to the H1, this is what equilibrium means. This same level is a gap level on H1. I did not need to mark this H1 gap level separately. Why? Because it is the same level. That's equilibrium. And equilibrium is almost often a sign that a level is very, very strong. Almost often. So this is a perfect example of an equilibrium. Okay, as you can see. So this is just imagine, just looking. Maybe I just came to the chart, and that's why when people ask me about storyline, I just laugh, bro. You don't need that thing as much as they say. Okay, so this is one engulfing. This is another engulfing. Okay. This is on the H4. So I'm already having an idea. Oh, okay. Does this mean price wants to buy? So what will I do? I'll mark this classic scenario. I'll go to H1. Okay, what is on H1 that can help me, give me an idea that price wants to buy? Okay, I'm on H1 and I'm like, oh, okay, price is reacting from here. Oh, this is a breakout over here. This is another breakout. Okay, so that's like two-time breakout. Oh, this is an engulfing here. Okay, so oh sorry, I marked the engulfing. And I'm like, oh, nice, this is looking good. And then the gap level. That's just H4, H1. Okay, so I'm like, okay, let's see what's on M15 that supports this theory. Is there any liquidity graph? Oh, I'm like, oh, yes, there's liquidity price. Takes the high over here, takes the low, right? Takes the high, takes the low. Comes, tap into that level. See, good rejection. I'm in the trade. And thinking, oh, what else do I have on M15? As you can see, this is a strong engulfing. An engulfing that has the good weak rejection over the bottom. This is a strong engulfing. What else do I have? I have an EFG on M15. This is an engulfing field, right? This one, two candles engulfs this candle. And I have an engulfing. So this is an EFG extended type. So you see the way all these things are coming into play. So I'm asking myself, what do I have? So this single trade, where was it beginning up from? Oh, I just woke up, came to the chart. I went to the daily first, obviously, and it came to 8 4. Oh, this is what I have in 8 4. This is nice. This is looking good. And then you can build that story. Okay. And what you can see is at the same time, there's an EFG over here, three candle type. Okay, just watch through. There's an EFG three candle type. Somebody is saying, okay, how am I going to take this buy and this at the same time? Now see. On H1, is there a reason to sell continuously? Blah, 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 blah. Just tell me, is there a reason to sell continuously? One, your first reason to sell will probably be somewhere around there. Okay? And as you sell, you probably sell into this level. This will probably be your roadblock. And because this is giving you a reason to buy, you take the buy trade. If I go to the M15, I'm asking myself the same question. Is there anything here giving me a reason to just keep selling? There's nothing. There's nothing. The only affirmative reason I have is to buy. That's why time frame conference. All the time frame must be telling you something. So you must ask yourself, what's this time frame telling you? What's that time frame telling you? Okay. So for example, if you want to keep selling, one of the good places you want to look out for to sell probably this EFG, right? This one. Inside, this is the big H1, H4 EFG. Inside this H4 EFG, there's an M15 EFG. So see what happened. When price got here, see, we got a slight rejection and then to the upside.
Yes.
Over and over and over again. You can be the captain of your own trading just by paying attention to little details. And if this trade is not clear to you, oh, you don't have to pick a trade. You just have to wait. Wait till things are clear. If you take a trade and you run in a loss, it might not be too good for your psychology. Okay, especially if you probably just bought a profit account. Okay, so when something is giving you more hints to do something, you take the initiative. So you want to ask yourself, which one outweighs the other? There is more reason to buy, as you can see, than there's a reason to sell. Okay, so you must put that as part of your consideration. I like this example. It's a very good example. It made us consider both buy and sell as they are happening live in the market. So you want to ask yourself which one is giving you a better chance. All right. That's about MTF and equilibrium. And I think I've also been able to go over how to mark them and how to refine them. Okay. So they are as basic as that. Now, to hidden edges and imbalance. Hmm. These two guys, they will literally save you. Hidden edges and imbalance. With this person, and we trade without equilibrium. Yes, you can. You don't have to see equilibrium to trade. The reason why I'm mentioning all these things is they will just tell you, they reinforcing whatever you are thinking concerning your trade. So you're asking yourself, remember what I said? It is time frame conference. You're asking yourself, what's the next time frame that's supposed me to buy? If there's nothing, then you leave. What's on H4? Oh, this is on H4. Lovely. Let me check H1. Is H1 also telling me the same thing? Oh, there's even H1 equilibrium. I love it. Nice. What else is on H1? Oh, the market has reduced this level. Okay, there's a chance that price will use this level. Okay, now let me check M15. And then you go to M15. Ooh, this is really going to be a buy. So you're taking from every time frame. You're asking yourself question, what is this time frame? What is this time frame telling you? You're not trying to force yourself into a trade that does not exist. You're asking yourself based on what you can see live in front of you. Okay? Live in front of you, right? So eating engulfing, like I said, eating engulfing would really save you. Okay? They would really save you. And what are they? Eating engulfings and imbalance. I call them weird candles. They're just super weird. And you'll be surprised at how powerful they are. They're super weird. Sorry, I may not be able to draw, but I'll show you examples on the chart. So let me take all of this off. Let's go to H1. So now this is an example of an eating engulfing over here. See this candle, this guy. See the way this candle and this candle are. This is an example of an eating engulfing. Okay. Let me look for another very good example. Another very good example. Eating engulfing. They just look so cheeky that you can't even give a meaning to how they look. Okay. Let me see. This is just eating engulfing. See this one here. This guy here, over here. See, they'll somehow have level with them. See them. Okay. And then you see a bearish candle beside it for a bullish type. So just look weird. See the way this guy ended here, and then this bullish candle came. So see, just bounces off. But they happen a lot though. They happen a lot. The same thing over here. This guy. It's same thing over that level. Let's see more example. It's same thing we have here. They're just weird candles. They will just look weird. It's looking weird and then drops. Sorry, I call them weird candles. See another one here. See it. See them. That's how they come in the chart. Oh. See it. Just so weird. But it comes sometimes they have gap levels. So gap level and then gaps. Alright. So see the same thing here too. Look at it. This one. Look at it. It's an eating engulfing. Alright. I know you guys probably know some of these things before, but I need to talk about it. Or you guys probably know something else as eating engulfing, but sorry, this is what I call eating engulfing. Look at it here. Just so cheeky, so weird. Look at it, man. It's so weird. If you have the idea of having a weird candle, same thing you have here for sales scenario, but it got broken. See, just so weird. If you have an idea, if you see a weird candle, you are likely correct. How can you tell that? How can you tell how? Can you tell how is that eating engulfing? Oh, okay. If you drop to a lower time frame, you see an engulfing. That's just what it means. If you drop to a lower time frame, you would see an engulfing inside of it. Okay. So person that asked the question, let's see this as an example. So look at this candle over here, weird candle. That's talking this way makes me remember and makes me understand. So if we go to M15, see, it's an engulfing. This is an engulfing. All right, so that's why it's called it engulfing. All right. So if you go lower, you find an engulfing. But sometimes you don't have to go lower. How low can you go really? So if you can just find it, just mark it. And if you can accept the risk without refining, it's good. If you can't, then you refine. So they're just super weird candles. All right, super weird candles. Okay. So the second type are the imbalance type. Now this imbalance one, these ones are again super weird. In fact, a friend of mine used to call this candle a prostitute candle because it's as though it's having a relationship with two different candles. Sorry, this makes me understand better. Okay. So now see this candle. This candle is an imbalance candle. This one, it just looks super weird. The moment you can have super weird in your head, you probably understand the majority of this. And you see, if you draw it to the upside, the price came, tapped slightly, and then went. This candle, this guy is a super weird candle. I'm going to mark. Okay. I don't want to mark the whole of it, so just this area, usually the gap level. But price still react to quote unquote most of the parts of the candles. Okay, another example is this guy. It's just super weird, guys. See, this guy in between these two crazy drops. That's how they look really. And one of the times you'll find them and they'll really work is probably you're trying to refine a level and then on M15 you just see that something is rejecting price. See this is an imbalance candle. See the way it looks in between every other candle looks normal. But bro looks so weird. Another family. This one is an imbalance candle. Okay. I know some people call it 50 or something, but just better. It's imbalance. It's not balance. It's not imbalance candle. Just whatever name you want to call it, just ensure you understand the concept. Okay, so another one here. Look at it. So cheeky. Look at it. So cheeky of a candle. Just looks weird, super weird. Okay. Another one here. Yeah, it's this one. This particular candle. This one. Just looks weird, right? So you see them over and over again. Okay. Um and they're usually very good, especially in high momentum market. I'm sure if we check EU, would see same thing on EU. Imbalance can use that which are rejection from both sides. So, okay. Okay. as rejection. Right, so EU, like I said, you see it when you expect heavy momentum drop to what is this guy over here. You guys are choppers. No, you see, sorry, Rena, you don't have to bother yourself with the rejection from both sides. Yes, you can have rejection from both sides, but any weird candle, really, just any weird candle. See, this candle is super weird, is it not? See, super weird candle. All right. So if you use weird candle, it's not bad. We don't have to have an explanation, but if you want to have an explanation, it's good actually. I like that. Um, but sometimes it's just good to have fun. So yeah, so that's imbalance, right? And yeah, I'm getting a little bit tired. So is there any question? Oh, no questions yet. Wait, sorry. Let's go to the last part for today, which is the most interesting part, which is liquidity. Hmm. Liquidity is very, very wide. A lot of these things are very, very wide, but for the sake of this bootcamp, I'm trying to condense them and all of that. So liquidity, I can't cover everything on liquidity in this bootcamp. I'll tell you everything, the things I use, and things you can use. Actually. So liquidity, there are two types of liquidity. Okay? Liquidity can either be based on time frame or based on structure. Sorry, I can also teach structure in this class because structure is a big part, is a big part of, but I can also teach structure. Okay. But liquidity can either be based on time frame or based on structure. So based on time frame, it can either be major liquidity or minor liquidity. And for major liquidity, usually liquidity from higher time frames, the monthly, the weekly, so previous monthly high or previous monthly low, previous weekly high, previous weekly low, or any liquidity area you can mark on those time frames. So for example, on the weekly chart, oh shit, what's going on? What's going on? Sorry guys. Quit up. Okay. Let's open another good chat. I know what happened though. Okay, so for liquidity, okay, I think we have to right? It's acceptable. So on the weekly, so I said liquidity can either be based on time frame or based on structure. So based on time frame, I mentioned that we can have major liquidity or minor liquidity. So major liquidity can be previous week's high or low, previous week's or previous daily high or low can either be previous month's high or low, or any liquidity level that you can conveniently see on these time frames. Okay, so this is the liquidity level that was taken upside. This is the liquidity level. As you can also tell, these are previous week's low or low, high or low of the previous week. Okay, this is also liquidity level. This is also a liquidity level over here. Okay, so if you go to the daily chart, it's still the same thing. Okay. So this was liquidity, price grabbed liquidity over here, took it out. Also, this was liquidity, price grabbed over here and dropped. What else? What else? Also this didn't take it through. This also, and on and on and on like that. So it can either be major liquidity or minor liquidity. So for minor liquidity is what you have on the lower time frame. So I say H4, H1, and M15. You can also see this on M1 actually. Okay, you can see this on M1. Okay, so for this part, for structural liquidity, I'm tempted not to record this class, but maybe I should stop recording. Okay, let me stop recording this. Right. That's